Hi friends, welcome back to Financial Hacker. Last year, two specialty chemical companies IPOs were launched, Rossari Biotech Limited and Chemcon Limited. Rossari Biotech Limited is subscribed by 80 times and listed at 57% above the issue price on the listing day. And Chemcon Limited is subscribed by 150 times and listed at 115% above the issue price on the listing day. This week, another IPO from this sector is going to hit the market in the form of Anupam Rasayan India Limited. Will this company also give the same level of listing gains? Should you subscribe? And how well this company fits in this highly competitive industry? To answer all these questions, let's jump into company details, product range, promoters, financial and SWOT analysis. This is CAKV and Mahesh, and let's get started. Anupam Rasayan commenced business as a partnership firm in 1984 and is one of the leading companies engaged in the custom synthesis and manufacturing of specialty chemicals in India for a diverse base of Indian and global consumers. Their key focus is developing in-house innovative processes for manufacturing products requiring complex chemistries and achieving cost optimization. The business has two verticals. One is life science related specialty chemicals that are used in agrochemicals, personal care and pharmaceutical sector. And the second one is other specialty chemicals comprising specialty pigments, dyes and polymer additives. Almost 95% of their revenue is received from life science related specialty chemicals vertical, and it has 6 manufacturing facilities, out of which 4 are situated at Sachin and 2 are located at Jagadia in Gujarat, with an aggregate installed capacity of 23,438 metric tons. The company has a strong long-term relationship with many multinational companies like Gigantia Asia Pacific Limited, Sumitomo Chemical Company Limited and UPA Limited, which helped the company to expand its product offerings and geographical reach across countries like United States, Europe, Japan and India. As of December 2020, they manufactured products for over 53 domestic and international customers, including 17 multinational companies. Some of their facilities got ISO 9001 and ISO 14001 certifications. Green manufacturing and green growth have always been top of their agenda. They have developed the new eco-friendly, safer and novel routes for many products. And most of these products have introduced on exclusive basis for their customers. Anand Desai, Kiran Patel, Mona Desai, KPI LLC and Rihas Industrial and Rescience Chemicals Private Limited are the promoters of the company. They together hold 5,69,33,461 equity shares amounting to 66% of the issued capital of the company. You can see the average cost of acquisition of shares by them over here. Company's 760 crore IPO will open for subscription on March 12, 2021 and will close on 16th March 2021. The primary object of the issue is to use the net proceeds for repayment of debts amounting to 5,613 millions and balance for general corporate purpose. The company has a fixed price band at Rs 553 to 555 per share, and investors can bid for a minimum of 27 equity shares and in multiples thereafter, translating to a minimum investment of Rs 14,985. A retail investor can apply for up to 13 lots, that is 351 shares with an investment of 1,94,480. The company has set subscription limit as not more than 50% for the QIBs and a minimum of 15% and 35% for non-institutional investors and retail investors respectively, and a total of 2,20,000 shares are reserved for subscriptions by eligible employees. The allotment will take place on 19th March and the refunds to those who fail to get the allotments will begin on 22nd March 2021, while the credit of shares into the demat account of the lucky bidders will take place on 23rd March 2021. Post allotment, shares will be listed on both Bombay Stock Exchange and National Stock Exchange tentatively on 24th March 2021. This issue is jointly managed by Axis Capital Limited, Ambit Private Limited, IFL Securities Limited and JM Financial Limited. K Fintech Private Limited is the registrar of the issue. Here, I would like to give you a brief about the lead managers. Do you know that the success or failure of an IPO mainly depends on the lead manager? They are the financial institutions registered with SEBI and they play a critical role in the IPO process. They work closely with the company from day one until the IPO shares get listed at stock exchanges. They help companies preparing for IPO to write the prospectus documents and get them approved from the stock exchanges and SEBI. They decide the offer price, public issue dates and listing dates of the IPO in consultation with the company. Most investors and IPO analysts check the profile of the lead managers before applying to an IPO. Let us have a look at the price information of past issues handled by them. Out of 5 issues handled by the Axis Capital Limited in this financial, one is trading at discounted price and the other 4 are trading at premium price post 30 days of their issue. And out of 3 issues handled by IIFL Securities Limited in this financial year, one is trading at discounted price and the other 2 are trading at premium price post 30 days of their issue. And with respect to JM Financial Limited, they have handled 5 issues in this financial year. Among them, one is trading at discounted price and the 3 are trading at premium price post 30 days of their issues. By looking at the past performance of the lead managers, we can say that there might be a chance for Anupam Rasayan Limited shares to trade at premium prices. On the financial front, the company has performed exceptionally well as the total revenue increased at a compounded annual growth rate of 24.29% from 3,491 million in fiscal 2008 to 5,393 millions in fiscal 2020. Despite the impact of COVID-19 pandemic, company's revenue from operations has significantly increased by 45% from 3,718 million in the 9 months ended December 2019 to 5,392 millions in the 9 months ended December 2020. The first 9 months of the current financial year, it has earned a net profit of rupees 480 millions for a total income of 5,631 millions. For the last 3 fiscals, the company has posted an average EPS of rupees 6.77 per share and an average return on net worth of 10.18%. And we can witness that operating margins are healthy and rapidly growing. Listed peers for this company are PI Industries Limited, Navin Fluorine International Limited, Aztec Life Sciences Limited and SRF. EPS of the company is 6.94 per share, whereas EPS of SRF company is 177.29 per share. And return on net worth for this company is 9.62%, whereas 28.93% for Navin Fluorine International Limited. And net asset value per share of this company is 76 per share, and whereas the net asset value of SRF company is 858.26 per share. The price to earning ratio of the listed peers are 65.72, 32.20, 42.73 and 30.58. At rupees 555, that is the upper price band limit of the issue, the annualized PE of the company based on 9 months EPS will be 69 against industry composite PE of 42.81. From this, we can say that the issue is aggressively priced based on the comparison with the listed peers. India's specialty chemicals industry is expected to grow at a compounded annual growth rate of approximately 10 to 11% over the next 5 years. Due to rising demand from end user industries along with strict global supply on account of stringent environment norms in China. India accounts for approximately 1 to 2% of the global exportable specialty chemicals, indicating a large scope of improvement and widespread opportunity. Custom synthesis and manufacturing operations is on the rise in India and is expected to grow at a rate of 12% in the next 5 years, owing to strong growth from end-use demand. Experienced promoters and a strong management team. The company is led by the experienced promoters, some of whom have a significant experience in the chemical industry. Anand Desai and Mona Desai have experience of approximately 28 years and 18 years respectively. As I have already mentioned that the total revenue of the company has increased at a compounded annual growth rate of 24.29%. Diversified customer base across geographies and industries. Acquisition of a customer is a long process in this industry. The company has developed strong and long-term relationships with various multinational corporations including Syngenta Asia Pacific PT Limited, Sumitomo Chemical Company Limited and UPL Limited. That has helped company to expand its product offerings and geographic reach across Europe, Japan, United States and India. As of December 2020, the company manufactures products for over 53 domestic and international customers, including 17 multinational companies. And Government of India has also recognized the company as 3-star export house. Capacity utilization and operating efficiencies. In fiscal 2020, the company commissioned 2 manufacturing facilities, namely Jagadia Unit 5 and Sachin Unit 6. Such additional capacity will be able to capitalize the growth opportunities in the specialty chemicals industry. And as of December 2020, the company's aggregate installed capacity was 23,438 metric tons. Higher capacity utilization results in greater production, and higher sales in turn increase profit margins. In-house R&D team to foster product innovation. As I have already mentioned that the company has expanded its commercialized product portfolio from 25 products in 2018 to 41 products by December 2020. India's specialty chemicals industry is expected to grow at a compounded annual growth rate of approximately 10 to 11% over the next 5 years due to rising demand from end-user industries along with a tight global supply on account of stringent environmental norms in China, that is China plus one strategy, indicating a large scope of improvement and widespread opportunity for the company. The Indian specialty chemical industry is fragmented in nature. Key players in contract manufacturing including PI Industries and Aarti Industries and several international players significantly from China, USA and European countries. If the company is not able to compete effectively with its competitors, it will have an adverse impact on their business and financial condition. The pandemic outbreak has caused an economic downturn on a global scale. Companies' customers are typically engaged in various industries including agrochemicals, personal care, pharmaceuticals. It is difficult for the company to predict the impact that COVID-19 will have on them. All the manufacturing facilities of the company are located in Gujarat, and any significant changes in the policy of the state or local government or the government of India could require the company to incur significant capital expenditure and change their business strategy. Concentration of revenues. Almost 87% of the revenues for the company are receiving from top 10 customers, and the loss of one or more customers will adversely impact the financials. And a significant portion of the revenues are received from a limited number of markets, namely Europe, Japan, Singapore, etc. Any adverse developments in these markets could adversely affect the business. And also a significant portion of the revenues are derived from the life science related specialty chemical segment, and any reduction in the demand for such life science products could have an adverse effect on the business results. Incurred significant indebtedness. As of December 2020, the company has outstanding debt amounting to 8,420 million. Inability to comply with the repayment and other convenience in their financing agreements could adversely affect the business, financial condition, cash flow and the credit rating. After the completion of the issue, company's promoters along with their promoters group will continue to collectively hold substantial shareholding in the company, which will allow them to influence the outcome of the matters submitted to shareholders for the approval. Anupam Rasayan Limited received a good response to its shares in the grey market ahead of its initial public offering. The shares are traded at 54% premium over the issue price on March 8, 2021. As on 8 March 2021, the grey market premium for the shares are quoted at 292-300, and on 9th March they are quoted at 310-320. From this, we can expect a positive reaction on the listing day. Here are the 3 key highlights we can consider to estimate the future listing gains. The company financials and industry data are showing promising results. Grey market is also reacted positively prior to the issue. From lead manager's perspective, almost all previous IPOs led by the Axis, IIFL and JM Financial Limited are oversubscribed and listed at high premiums over the issue price on the listing day. So, all the above key points denote a positive reaction on the listing day. We strongly advise you to make proper research before making any significant investment decisions. Investors looking for long-term bet may consider investments in this IPO. That's it for today, guys. Hope you learned something new. A new video is coming on Lakshmi Organics, another company that is expected to begin the bidding process next week. And now it is trading at a grey market premium of 85%. So please subscribe and turn on notifications to get early updates. Thank you.